What's up, guys? Welcome back to another weekly Beluga podcast. It's your host, Will. We're missing Chris today, but we brought on two other members of the Beluga team. One is our head of engineering, and Brian is our new head of partnerships, who actually started this week. So I'll let Nick give his quick intro first, and then we'll get into things.
Hey everyone, I'm very honored to be a part of this podcast. I joined Beluga the first week of this past February, and it's been really exciting. Handling and working with different engineers and handling the engineering work here that we have at Beluga. Really excited to bring Brian on board, and I'll let him give his intro.
Awesome. Thanks for having me. Excited to be joining Beluga. It's my first full week here. And previously, I'm coming from Multi-Chain Advisors, a Web3 management consulting firm, where I worked at for 2 years as a senior strategy advisor. We help projects with basically everything minus development work. That would be either go-to-market strategy, user growth, capital raise advisory, tokenomics support, airdrop launches, everything but development work. Excited to be here at Beluga as a head of partnerships, and yeah.
Yeah, so just like we always do, we'll start things off with a bit of discussion on what happened with the majors this week. I think it's been, by the time everybody's watching this, probably 3 weeks since our last upload, so we can kind of go through what's been going on here. As we can see, it was a bit of a rough day for Bitcoin. We ran back down to the 60K line after a pretty strong bounce from the lows in May, and it has caused like a really negative sentiment on the timeline and among traders and everything. Everybody that I've talked to is having a really difficult time in this kind of summer chop environment. Um, to me, though, as I've mentioned on the podcast a lot, and as I put in the newsletter almost every week at this point, if you are not trading on leverage, this kind of price action does not matter. We can see if we look at the actual price range, like this has been about a 15 to 20% range that we've been trading in since March, which if you've been in the crypto environment for a little bit of time, this is not a volatile market. 15% is really not very much. So to see everybody getting chopped up like this, massive liquidation cascades happening, this is really because people are using leverage and they're using high leverage. For me, like again, we're still trading in this range. Things may not look great, and part of that is that the Ethereum ETF hasn't hit yet as we expected it to, which we can talk a little bit more about in a second. But the reality is we're still holding 60K. We're in this new range. I'm still calling this a bull market, very much so. And I feel like, as this is one of the things that I've talked about before. I think, like in previous cycles, we saw Bitcoin lead the charge, and then it stagnates, it kind of pulls back, holds within a range for a little bit, and that's where we see Ethereum and other altcoins tend to have their run. It's been interesting to me to see people not recognizing that because I think it's almost exactly what's happening. So Bitcoin led the charge because, of course, it had its ETF inflows, billions of dollars flowing into the coin, had a massive positive price impact. So of course it led the rest of the coins. Now we have the Ethereum ETF narrative coming in after Bitcoin's price has kind of stagnated again in this 15% range. So the way I'm looking at it is we wait for the ETF inflows to hit. It may not necessarily cause a massive jump overnight, but we are going to get billions of dollars flowing in directly to ETH. And if that doesn't kick off an altcoin rally, I don't really know what will. So that's kind of how I'm positioning at this point. We'll get into a deeper altcoin discussion later on. But I guess while we're here, we can take a look at the ETH chart as well, because it's a little bit different. Because we had this pop later, I guess mid-May at this point, where we found out at first that the ETH ETF was getting approved. nobody thought that this had any kind of chance of getting approved. So you can see right here, I believe this was the largest single day dollar increase in Ethereum's price ever. We're still holding above where that pump started, but as with crypto goes, like people really have short-term memory spans, and like the ETFs haven't been trading yet. So we're kind of just bleeding down to back where that candle started because the rest of the market's bleeding and the inflows aren't coming. I guess I'll kind of turn it over to you guys, Nick and Brian. I don't know if you have any thoughts on the majors specifically, but before we move on to other stuff, yeah, what's your take on the market?
I can go first. I would say predominantly that my beliefs are that Bitcoin is the primary driver of any crypto market. For like Will has been mentioning, like a larger subset group within crypto, such as an L2 altcoin. Here we have Ethereum that I think is also tied with Bitcoin as a whole. So I expect that if when we're looking at the crypto market, I really pay attention specifically to Bitcoin and Ethereum in order to drive my other investments with the other allocations that I have. And with that being said, I think that I'm under the mindset that I think Bitcoin and Ethereum are only going up. So when it goes down, like we've been seeing the past couple weeks, month or two, I honestly don't. It doesn't really affect me, and I really just try to add more of those two as I think that on a long term scale that they are the two crypto plays that you should be allocating your investments towards.
Yeah, I mean, to your point, if we look at basically since FTX collapsed in, I believe that was November of 2022, if you had bought Ethereum at any time other than the last couple of weeks, you are currently up on your money. Like these things are growing, and the reality is the crypto market is still quite small relative to other global financial economies. So yeah, I completely agree with you. Dips are for buying, especially when you're talking about spot buying. If you're buying in spot, it literally doesn't matter where the price moves, because you can't get liquidated. That's the beauty of it. Um, Brian, I know is my Solana guy, so I'll give you your stage at some point.
Yeah, that's funny. Like, of
Yeah, I
course,
guess yeah,
I
go
always want
go ahead.
to continue adding to my ETH bags. It's quite possibly like this is one of my smaller allocations. Like I'm very big on Solana. It was the chain that I started on 3 years ago, and it was honestly straight down the entire time I've been around in crypto. But it was just a community that kind of really got me, and that was a very evident trade that I missed with size back when we fell down at $8 after FTX and all that. But I'm slowly diversifying my portfolio a bit more, getting a lot more Bitcoin and Ethereum in there, and decreasing my exposure to Solana a little bit. But I am still very bullish on Solana and always will be, and will always be my home chain.
Respect. Yeah, I guess on kind of on this thread of altcoins and stuff, we had I believe it's now the fifth largest airdrop in crypto history happened this past week with the Blast token. So for anybody who doesn't know, Blast's main value prop as a layer two for Ethereum is this concept of native yield, where on other chains, you may bridge your Ethereum over or your stable coins over, and they're just kind of sitting there. You can use them to trade or whatever you want. But on Blast, they're actually automatically staked when they are bridged over, which means you are earning. Uh, it's a dynamic rate and depends on the asset, but around a 4% annualized yield on those two assets just for having them on the chain. So that was a really cool kind of innovative feature. I think interestingly, Blast has kind of morphed into. I'll pull up the chart here as well. Uh, Blast kind of became this just farming chain, and the reason for that is they gamified the crap out of their token launch. And so for the last roughly 8 months, I believe, it has been the focus of almost every airdrop farmer in the space. And if we look at the token chart here, we can see that that's more or less reflected in the price action over the last week. People, including myself, were expecting this to launch much higher at around a $4 to $5 billion FTV. We're currently sitting under a $2 billion FTV. So I kind of have my own thoughts on why price is not going where I expected it to be and why it launched lower than I expected it to be. But I'd love to hear, Nick, your thoughts. I know you've been involved in Blast, and it's been one of your focuses as a trader. So would love to hear your thoughts.
Yeah. So I think when it comes to the Blast ecosystem, I really would say I think about it in terms of the Blast farming as a whole, and then my opinions on the Blast token itself. So I think shortly while we're on the token chart here that Will is sharing, I think that the way that it really seems that the high level leaders of Blast, how they've participated in their past projects, are that it's really they have these ideas and they really push them forth. So with the token, we're really in a waiting game to see what the leaders of Blast are saying is the next initiative in order to drive certain factors that will lead to this token actually rising in price. So it's more or less of having, my opinion is having blind faith in the people that are running the Blast ecosystem for the token price. And then when it comes to farming, it was a really fun farm, more or less. It was my first real one within the crypto space. And I was really excited for that to be fantasy top. And so I think it definitely provided it still has been and is providing a lot of fun, as well as pretty much trying to earn Blast Gold. That pretty much was when it came down to the Blast farm, you would either earn Blast points or you would earn Blast Gold. And it was really up to you as the farmer to pretty much decide what you thought had a higher value and what was being under farmed when it came to that. And I was lucky enough to have certain peers around me that pushed me towards the fantasy top space, and I was participated in it, and it did end up being an under farmed Blast Gold, where Blast Gold had a higher token value than points. So I was lucky enough to see that with Blast Season 1.
Yeah. Yeah. I mean, I similar to you. I was love Fantasy Top. I thought I've spent, I mean, so many hours over the last couple of years farming for various airdrops, and Blast was easily the most fun one that I've ever engaged with. Uh, but I think it's interesting because if we look at the valuations of other layer two networks, which is again, I predicted something like a $5 billion FTV. When I was running my numbers, I used what I identified as basically peers or good comparisons, more or less, between them and Blast. So that would be something like Optimism, Arbitrum. We can see here OX Bread Guy, who, if anybody doesn't follow Bread Guy, he's a great, does great analysis and charts. So highly recommend giving him a follow. But yeah, if we look at these other layer twos, they've all launched not only at ridiculously high valuations, so that would be stuff like Stark. They have very few users, and they're still sitting at like a 10 billion, $15 billion fully diluted valuation. Arbitrum and OP, Optimism have both been around for quite some time. I believe they've earned their valuation. But it's interesting because people are now claiming that the price of Blast is dropping and dropping because it hasn't received as much love in terms of incentives for holding it on the Blast network as you might find for. So to give some more context, there is a season 2 of Blast farming where you earn points and you can earn Blast Gold and whatnot. But you earn points by holding ETH stablecoins or Blast tokens on the Blast network. Um, Now, the issue is that Blast, the token itself, does not have native yield. That is just for ETH and stablecoins because that stems from real yield. It's interest payments and etc. The Blast token doesn't have that, or at least it doesn't have that yet, which means of the 3 assets you can earn points for, it is automatically the least desirable versus the other 2, because again, you're just missing out on a free 4% yield. So a lot of people are pointing to that as the main reason that Blast has been underperforming. I guess I'd like to take like a closer look at the dynamics of of the Blast token itself and how Pac-Man, who's the founder, tends to run things. Bread Guy makes a great point here, where if we're looking at normal comps, which are usually done by some combination of TVL, total value locked, fees generated, active users, all that kind of stuff. Blast is up in kind of the upper echelon of layer twos, which is where the higher expected valuations came from. Now, just because you can say something should be valued somewhere, that doesn't mean that's where the market is going to value that. And I think what we've seen so far is really just a reflection of people who believe it should be valued higher, waiting for people who just farmed 8 months to get this airdrop to kind of get out of their bags before they start buying. I also think fortunately for traders and unfortunately for farmers, Blast launched at a difficult time. We could see on the Bitcoin chart, Bitcoin itself was dumping, but altcoins across the board have done much, much, much worse than the majors. So it's a difficult time to launch a layer 2 token and expect it to do well, especially when really the main utility is governance. And while I don't think that's a problem, it's what Arbitrum and Optimism both do. Because they've cultivated this kind of image of airdrop farming, of yield farming, etc., not having that be natively baked into the token, I think left a lot of bad taste in people's mouths, especially the airdrop farmers who are basically the ones who have all the tokens at this point. So this is a long way of saying I am surprised to see it launch this low, but I'm not surprised to see the price action off the back of it. I expect a pretty strong reversal. I've been buying myself on top of the already somewhat significant airdrop that I got. But I think it's interesting to see because this was supposed to be the airdrop to kind of save the airdrop meta, and that is certainly not what we've seen so far. And then I guess kind of the last point I'll make here, I mentioned Pac-Man is the founder of Blast. He's also the founder of Blur. And for anybody who was around when the Blur token dropped, nobody knew it was really. Well, we knew a token was coming, but nobody knew it was going to be as big as it was. And basically, what Pac-Man did is oversize the airdrop and make a bunch of people money. Now, everybody was expecting that to happen on this one, which I think is part of why it didn't. I think he's more going for a call it like a Celestia model, where Celestia, which is now one of the larger tokens in the space, I don't remember their exact valuation, but Celestia launched at a very low valuation. And people were upset with their airdrops because they said it was too low. Now, the interesting thing was it should have been valued much higher. And the smart traders identified that and they ended up making money on the token. And that was, in my opinion at least, that was the biggest part of marketing that Celestia ever did. That's how they got most of their users, was other people, traders really, making money and tweeting about it. And I think we've had this trend of everything launching really high, which means traders don't make money on it. And it's my opinion that this is kind of a they're trying to emulate that Celestia run up and try to gain some marketing for free, more or less. I don't know that. I don't have any inside info. That's just kind of my guess as a trader who is also expecting to make money on this token. I guess that kind of wraps up. I just kind of monologued on Blast. I'm very passionate about Blast. If anybody can't tell, I guess for our well, actually, you know what? Let's go down the altcoin list. I'd love to talk about BitTensor Tau, which is I'll pull up the chart here. BitTensor is the largest AI token in crypto, and it's usually kind of seen as more or less an index for the rest of crypto AI tokens. And as we can see, things have not been going great for Tau over the last couple of weeks. It has more or less been down only, which is really interesting to see alongside obviously, Nvidia has been making new highs basically every week, and the AI sector in general is still by far the highest in investables. I don't even know how I wanted to say that. A lot of investors are still clamoring over AI, especially on the early stage side, and it's interesting to me to see the crypto AI sector not catching a bid really at all. I personally don't buy these AI coins because I think most of them are total vaporware and potentially even scams. But BitTensor is one that's actually received quite a bit of use. So if we look at the chart today, we can see they've had a massive downwards candle, which actually, interestingly, even though the volume spike is much higher than what we see over here, it's actually, in terms of magnitude, not as large. So what happened, I believe, last night is reports surfaced that the BitTensor network itself had been compromised and users' wallets were getting drained. I don't know what the total was, but I saw one wallet was drained of $8 million worth of tokens. As far as I know, this has still not been, the root cause has still not been found, and the issue has not been fixed. But obviously, it's a big problem if you have a multi-billion-dollar tokens network getting hacked. Um, I think this is also potentially at least a short-term death sentence for the crypto, at least like the large cap crypto AI sector in general. And yeah, Brian, I'd love to hear your thoughts on the AI sector in general or Tau specifically. What are you looking at?
Yeah, definitely. I think the AI sector's it's been bleeding, like you said, for the past couple of weeks throughout this altcoin dip that we've all been feeling. But it's very strange for me to see that because the Web2 world, there's a lot of money that's flowing into AI startups, and it seems like it's the talk of the town. Recently, Elon Musk raised $6 billion, I believe, last month for his brand new AI startup. There was also a recent seed round to raise $80 million. I believe the company was called Sentient,
Mhm.
AGI. But there's a lot of money that's flowing into the sector, which makes me think that it may just be lagging a little bit.
Mm.
Um, but of course, like it all really depends on the actual product. And a lot of them
Yep.
raise money based on an idea,
Yep.
and they never get to the product point where we can see the returns and see the actual growth of the AI sector within crypto develop and mature. So hopefully, over time, these next couple months, we start seeing more of these actual AI companies within crypto that are doing something meaningful and something that contributes to the entire ecosystem. And I've got my fingers crossed for it. It seems like a good opportunity with a pretty solid risk and return, in my opinion. So I will continue to be looking into AI tokens and adding in some on dips and trading them.
Mm. Um, yeah, no, I think there are certain pieces of AI that I think make a ton of sense to use crypto or blockchain tech for. Like, for example, the idea of decentralized compute is a huge topic right now because there are a lot of both capital and just physical requirements to be operating a big data center filled with GPUs. Um, as I think Sam Altman asked for like $7 trillion or something to build a big compute warehouse. So I think decentralized compute makes a lot of sense for blockchain rails, where we have an industry that has a very high density of good quality graphics cards because we're gamers and we need to use it to mine other blockchains. So it's a very target-rich environment for some kind of middleware operator who can route LLM requests out to different GPUs. There are a bunch. I don't want to shill any specific ones because I don't know if they're good, but I've personally mined for a bunch, and you can see just by the volume of requests that it's actually been a very effective way of sourcing compute for individuals and businesses and whatnot. So I'm interested to see stuff like that continue. I'm not as bullish on a crypto native developer actually being able to create some kind of whether it's an LLM or another piece of AI technology. I'm not as bullish on that coming from crypto natives purely because we just don't nearly have as many developers as you would find in the Web 2 world, and we have much less money. So I think that'll come out of the Web 2 world. But with that said, I do think there are a lot of intersections that could be built on top of that. I don't know if I believe a lot of the, I mean, Tau is whatever, but there are a lot of AI tokens that claim they're going to change the world in crypto, and I just don't believe that.
I really I really like what you just referenced, where you were saying pretty much the use cases behind what you could see in Web3 versus what you could not see in Web3, and how that would be in Web2. And I think what you just mentioned, how pretty much enhancing and maximizing the LLMs and the different algorithms that go into the model itself, how that would be in the Web 2 versus the Web 3. And I 100% agree with you, based on the fact that it really seems that we've seen all this funding and all this money put into the Web 3 space because they want to be the NVIDIA of the AI. They want to get, they want to and raise as much money as possible, to invest as much money as possible into their engineering and their resources, to try and be the, like, whatever that is, they want to be the monopoly behind it, and that's in the Web 2 space. And so yes, we will definitely see money trickle into the Web 3 space behind AI tokens. But it's like what Will was mentioning, where it's really like, hey, we're not going to have a developer in the Web3 space actually build on top of the LLM itself to enhance a centralized model, but instead it's what the tokens that you would want to be investing in are really the projects that you really believe in their AI white paper. You really believe in the developers on the team, that they will fulfill the specific AI tasks that they have outlined on their roadmap, and that those outlined tasks on the roadmap are what will drive the token holdings and the transactions that will then drive the price action towards it.
Yeah, I think the one other thing that I forgot to mention as a use case is the idea of an uncensorable LLM model. I personally see a ton of discussion and fear really over the way that the big AI models are being, or rather are censoring information and kind of forcing informational biases on the users. In crypto, you can actually design the the data set that the model is trained on, as well as just because you can use a decentralized peer-to-peer payment system, you can basically get around any of this kind of censorship. So there's a company called Imagine AI, whose whole thing, it's a crypto-based company. Their whole thing is they want to be like Mid-Journey, but with zero censorship. So of course, most people use it to generate like porn and stuff like that. But I think it's a really interesting and really important, rather, concept for us as humans as we move forward through AI. I'm personally really scared about viewpoints and information being forced, whether you know it is or not, on people. I think that's a really, really dangerous thing that we have to be very careful about. And crypto and the whole peer-to-peer uncensorable ethos, I think, fits really well into that. I don't hold any Imagine AI tokens. I don't know if the token's going to do well. I just think what they're doing is cool, and I would like to see more teams try to replicate that kind of thinking. Um, yeah, I think this might be a good point to transition to PolyMarket and election stuff. Anybody who lives in the U.S. has been unable to escape how horrible this election process has been. And the debate last week, I think, made everybody's fears even worse, whatever side of the aisle you're on. So one company, a crypto company that seems to have found their product market fit is a company called PolyMarket. So their pitch in quick words is a decentralized prediction market where they will basically create betting pools for almost anything. And as we can see here, they've been doing a lot of polls and betting pools for the election, and it's become a pretty good and relatively accurate indicator, I think, of what ends up happening. I mean, these are people betting real significant amounts of money on outcomes for things, so there's quite a bit of analysis that goes into those bets. And funny enough, Trump has been, I don't know what they call it on Truth Social, but has been posting screenshots of the PolyMarket election prediction data on his Truth Social like every week. So for me, PolyMarket's really exciting because it's actually found a product market fit outside of crypto, even though it's all the betting is done in crypto. So we can see after an announcement from the press secretary today, about an hour ago, Biden says he's not dropping out. Instantly, the market corrects itself. I think this is so cool, and I'd much rather we moved towards using polling data like this rather than like some random selection of people that some random company you've never heard of picks out, because I think this is a much more accurate and data-driven way of predicting this kind of stuff. Nick and Brian, I don't know, I don't want to talk about like election stuff specifically, but I'd love to hear if you guys have any thoughts on PolyMarket or prediction markets or finding product market fit, that kind of thing.
I just have one brief comment. I just find it really interesting. I probably as a user have not really understood everything PolyMarket did up until this past week. Whereas you can see on the screen, if you go back, Will, to the graph, you'll see on June 27th, you'll actually see that spike up from that was actually live from the election, where the spike, I was watching the presidential election, as I'm sure we all were, and I go on Twitter and I see a spike 15% more likely that Biden drops out of the presidential race a couple minutes into the election, into the whatever the briefing was. And I found that really fascinating as a user.
Yeah, the market is quite efficient. When there's money on the table, people are going to be reacting quickly. I found that really interesting too. And yeah, we can
Yeah,
see on on this tab, their betting volume has gone absolutely ballistic through this election cycle, which I think is quite interesting. Hasib disclosing that he's an investor here, but he's right. I think these kinds of volume spikes are really interesting for me to see, because I think most of the gambling that happens in crypto is either done on meme coins or on like crypto casinos. PolyMarket up until now had never. I think it was always kind of like on people's minds, but I personally I've never placed a bet on PolyMarket. Even though they gave me free money to place a bet, I still haven't used it. And I think that's the case for most people, but it's interesting to see like this election cycle, when everybody's talking about it, they're actually getting quite a bit of attention. I'd like to think that some of it comes from non-crypto natives as well, but I don't know if we can look at that data. Yeah, sorry, Brian, I interrupted you. What were you saying?
no, I was gonna say like one other thing that I really like about PolyMarket is it's not just like restricted towards like these political probabilities that people that's the talk of the town at the moment. Like I also saw a post today that one of the largest influencers on Solana called Ansem, there was a PolyMarket bet on whether he's gonna put out over 150 tweets this week or not. So it's like a very cool way to like open brand new markets that people never really thought were possible. And when people see opportunities to make money on, like people flow in by the masses. So it's going to be very interesting, and I'm very
100%.
excited to see all the growth that PolyMarket's going to see. Like the talk of the town is going to be the election cycle for the next 4 to 5 months, and even after that, like I'm sure there's going to be some after, like regardless of who wins, what their first actions will be, like stuff like that. Like it's an untapped
Yep.
market here, and very excited to see it grow.
Yeah, I mean, I think their biggest issue until now has been liquidity on these bets, which basically means, so the way these work is, so these percentages here are actually decided by like crypto trading prices, more or less. So people can trade tokens that are assigned to Trump winning, to Biden winning, to Michelle winning, to Newsom winning, etc. And the price and the forecast percentage will change over time as a function of that. So when you don't have a lot of liquidity in the pool, you're one, like, you're going to be less accurate because people are not able to like accurately arb what they view as the changes in forecast percentages. But also, like, look, if you're a bettor, you have a certain ticket size that you're looking for bets, and if the markets can't support that, you're going to go bet somewhere else, which is what I do. But through all this attention, I don't know if they received a new round of funding or how it's working, but I've noticed they have a ton more liquidity on their platform. So I think this thing's going to keep growing. This might end up honestly being one of the biggest apps in crypto. I wish they had a token for me to buy. But yeah, no, I love PolyMarket, even though I haven't used it. I just really respect what they've done.
Yeah, I think this speaks into we touched on earlier in this podcast. We've touched on like the AI market in Web 2 and Web 3, and this is truly a new market that we're seeing as an everyday user, like here in America. How it's been brought in the last year and a half plus with the likes of DraftKings and FanDuel specifically, and how large the betting market has been in countries within Asia as well as across the world. We're really seeing it for the first time in a democratized, pretty much regulated way here in America, and that is super positive and builds a lot of steam for a company like PolyMarket that is global and wants to capture that American users. You can think, Will mentioned that when he first brought up what PolyMarket specifically is on this podcast. He said that it is not regulated in the US currently. Think about the day that happens and what that means for their market share. So
Yeah, I mean, I think I I like betting on things personally. And for me, one of the biggest issues that I have with normal betting platforms is like there's just no transparency or anything. And as a crypto native, like I need things to be transparent, because everything is. Um, and I also think, well, we don't have to get into this whole discussion, but betting in the U.S. has become so pervasive into like everything, and that's also a function of us becoming more like entertainment focused as a society. But because of that, like betting has been able to kind of work its way into like everything that we do, which I think is both maybe scary and dangerous from like a personal savings perspective, but also as somebody who believes that crypto is the most pure, unadulterated, streamlined form of gambling where there is no cap to your win potential. I think it's quite bullish for crypto as an industry as a whole. So yeah, Polymarket is kind of a good bridge in between the two, I think. Yeah, I'm excited to see where they go.
And I honestly
Um,
think it's going to be a very big like onboarding driver these next couple months. Like think of how many like normie Web 2 people that are going to start seeing these probability markets come up on meme pages, on Instagram, on all these other pages. They're going to be like, the first thing they're going to say is, all right, how do I get on this? I'm totally going to bet on this. So
yep,
it's going to be
100%.
very, very good for the entire ecosystem in general.
that's a great point.
I guess we'll kind of start wrapping things up here, but section we haven't done in a little bit, Shill of the Week. I'll let you guys start it off. I've talked a lot, so Nick or Brian, you guys wanna go first?
Let's hear it, Brian.
Sounds good. So, Will, do you maybe want to pull up the shadow chart? Perfect. All right, so this is actually a token that I've been buying on Solana for quite some time. It's the native token for the Shadow Drive, which is a decentralized data storage platform built on Solana, and everything's powered by their Shadow token, and they have a lot of very cool deflationary mechanics built into it. And they recently launched the V2 of their platform last month, and one big driver that's been really holding their price back is the fact that FTX was an investor of Shadow and held millions of tokens of it. So for the past couple months, they've had a DCA function open on Jupiter, selling 50 to like 100, depending on size of Shadow token, every 5 to 10 minutes. So that's what was like highly restricting their positive price action, which seemed like they were leading into. And it seems like now they've fully depleted their entire supply. And with the V2 of their platform launching, it seems like they're going to be ramping up their marketing as well. It seems like a pretty good way to get back towards the $1.50–2 range where we were at just like 2-3 months ago. So that's one thing I've been buying and consistently rotating my profits from any meme plays or any of my more degenerate trading activities. I always like rotating profits right away into my more longer term investments.
I like it. I remember talking to you about Shadow a while ago.
Yep. You did good by not
Uh,
getting in with me though. Always a little bit too late when I buy. A little bit too early, I mean.
it's much higher than I thought it was. I didn't realize they were
Mhm.
still at 100 mil. It's not bad
Yeah.
at all.
And it's a very low token supply too.
Nick, oh, does it? Like circulating? Interesting. Um, Nick, you want to give us your shill?
Yeah. Well, I have one kind of joke shill that's half joke, half serious. Then I have one serious shill. So the first one being there was a tweet this past week by a crypto influencer, Vidamo. I don't know how to pronounce that exactly.
Vidamo.
Vidamo. So Vidamo tweeted out, he said, "Am I not the largest public shiller of this coin lock-in that there is on Twitter?" I didn't subtweet him, but my initial reaction was subtweeting him and saying, "Yeah, you've met him right here." So yes, lock-in is my half joke, half serious shill on this podcast. But then on a more serious investment oriented shill, I would really just harp on using Ethereum as your crypto savings account, and that any, like Brian just mentioned, like any net positive trade you have, really building and stacking on that Ethereum savings account. Whatever the price is, it doesn't matter. If you believe in the crypto market as a whole, Ethereum is undertapped, and there's a lot of potential there with that investment. And if it goes up, obviously, I'm not saying put your savings account into it. You want to it's like Web 2 and Web 3. You want to have an allocation of both with your different sizes, depending on who you are and what you value with your investment strategies. But on the crypto side, on the Web 3 side of things, if you're in Web 3, let's start with that Ethereum savings account to build your value and stack that portfolio. Because you see a lot of times, hey, I went from this X figure amount, dropped down all the way to this. If you make sure that you have an Ethereum savings portfolio, you'll always be okay at the end of the day.
I love it. And also don't forget we got the ETH ETF coming soon, which oh yeah, we didn't talk about that. I guess just quickly we can talk about where that's at. So the two big Bloomberg ETF guys, it's a Jason Seifert and Eric Balkunis, predicted that the ETH ETFs would start trading on July 2nd, which at time of recording was yesterday. So obviously that didn't happen. Um, we don't really know why. That was not an official date set by the SEC or anything. I don't think it's anything to be worried about. In fact, that turnaround time was like really fast. I'm still expecting to see the trading start in probably the month of July, but we don't know. I also would say or urge caution to not think that it's going to instantly moon the price of ETH, because it won't. And who knows where price will go. But if we use the Bitcoin ETF launch as an example, where they had similar dynamics. So there's a company called Grayscale, which offered trusts that people could invest in for Bitcoin and ETH before these ETFs were launched. The only catch is you couldn't actually take Bitcoin out of the trust. So what that meant is all of these trusts were trading at about half the value of the NAV, the native asset value. So smart, savvy investors were buying up these trusts for the last couple of years at a massive discount, and now the price has also run up quite a bit. So what we saw with the Bitcoin ETF launch is GBTC, which again was Grayscale's trust, was converted into an ETF. So we saw massive outflows from GBTC as people would redeem for the underlying Bitcoin. Um, and I kind of expect to see the same thing on the ETH side. We'll see, but it's a very similar dynamic. So I expect probably prices are somewhat sideways for the first week, as we kind of get rid of that grayscale dumping, and then I think things will move on up from there. Again, I think we're still right in the middle of a bull market, so I'm quite bullish. Um, and then yeah, for the last one, I guess it's my turn to shill. I think I may have shilled this during our last podcast. Sure doing well today. Um, but my shill is Phantom, which if anybody, we'll zoom out even more. Phantom was not the biggest DeFi chain because that was ETH, but in terms of like the hardcore like DeFi Ponzi's, last cycle Phantom was the home of all of that. And as you can see, much like the DeFi Ponzi's it supported, the token price did not fare well after the bear market, or sorry, after the bull market and leading into the bear market. It's been absolutely brutalized. The reasons for that are one, kind of what I said there, that they were a big DeFi chain, and like DeFi kind of died when everything was collapsing. Um, and they also had a series of controversies. There was the multi-chain bridge hack, not related to Brian's former employer, but it is the same name, where a lot of the Phantom supply was locked into this bridge by an exploiter, um, which had a very negative effect on the price. Um, and so now we're here, where they haven't fully gotten their ecosystem back, but they're kind of there. The multi-chain thing was figured out. Um, but most importantly, what they're now doing is what they're calling the Sonic upgrade. So the current chain is called Phantom Opera. The new one will be called Sonic. And basically, it's a massive upgrade to network throughput, to network speed. Transaction fees will go much further down, even though they're already cheap. And overall, the quality of life improvements will be quite massive. And the other kind of interesting side of that is rather than just upgrading the network itself, they're actually launching Sonic as its own chain with its own token. So what that means is when it eventually launches, which is I believe slated for late August maybe, um, the new Sonic token will launch, and you will be able to convert Phantom to Sonic one to one. Now, what that will do is basically a full rebrand of Phantom. So you'll have a fresh chart. You won't have any of the controversial baggage that Phantom has had on it for the last few years now. And it's good tech. So I think that's a pretty powerful combination of things. I've been buying a lot of Phantom. Personally, I've been buying it on the Beluga trading wallet, and I am pretty excited about this upgrade. Turnaround time expected 3 to 4 months probably. Don't buy it on leverage. Buy spot Phantom. It's an altcoin. It moves around very quickly, as you can see. Um, don't be afraid when things are dipping. Every altcoin is dipping. Just buy more if you have conviction. That's my advice. And don't trade on leverage.
And as someone that spends a lot of time around Will, this is definitely one of the coins that has been reinforced into how much how positively he thinks about this as a crypto play. So I'm just here to reinforce that.
Yeah, I mean, I was big on Phantom last cycle. It was probably behind Ethereum. It was my most used chain by a significant amount, probably. Maybe that and Avalanche, those three. So I'm excited to be home, more or less, and excited for this upgrade. Oh, so sorry, important context. The upgrade is already happening on Phantom Opera. I think something like 80% of the validators have been upgraded to the new client already. So the tech will also be live on Phantom Opera. However, the new chain that everybody's going to be using is Sonic. There's some other interesting features too. I kind of gave the high level overview, but yes, I like Phantom.
You
Good
can
coin.
expect to find more on our Beluga trading wallet, where you can actually follow our Beluga Phantom trade in live action, as well as see our content and articles that we have in addition.
Yes, sir. Yeah, I think we'll kind of wrap things up here. This was a bit of a long episode, but thanks Nick and Brian for filling in for Chris. Yeah, maybe we'll see you guys on again in the future.
Yeah, definitely. Whenever.
Just happy to be here.
Yep. All right. Thank you everybody for tuning in, and we will see you next week. Later.